China inflows have been flat to down. Some are seeing outflows. And you look at Hong Kong, you look at the Hang Seng, you look at the mainland China indexes, they've hit multi-year lows. But the Shanghai and Shenzhen indexes have gone nowhere for 17 years. They're literally at the same price they were in 2007. I mean, think about that, how much China has changed in those 17 years, but the two major mainland indexes haven't changed. So your China ETFs, I looked at, it's got all the usual names. You've got Tencent and Alibaba in it and Baidu, as well as the big the big China banks. So suss this out for us. Why are investors fleeing China right now?
Yeah, I mean, the geopolitical factor with China is certainly on everyone's mind. Lots of different ways to play the China market. Over the last, I call it 5 to 10 years, we've seen Hong Kong and China probably moving a little bit more in sync, especially with China's China's impact on the Hong Kong market. And yeah, as we've discussed earlier, China was down last year. It is down again this year. Investors are probably looking a lot of the political side and also some of the multiples that we discussed earlier here, and thinking, is this the time to dip my toes back into to the Chinese markets, especially for the single country ETF users who are rotating in and out of these different countries and trying to find what macro view and what signal to do to come back in. So,
Mike, I'm going to ask the broad question about whether China is investable or not. So there's 3 different ways this has played out in the last decade. You've been part of this as well, and so have you, Dave. But 7, 8, 9, 10 years ago, we were all debating about what's the right place for the global portfolio. And basically, everyone was coming down on the side of market capitalization. So if mainland China was, pick a number, 7% of the global market capitalization, you owned a fund that had 7% of mainland China and whatever more added for Hong Kong. There was, on top of that, there was also the value guys, which you referenced there. So China, there were value guys. If China's trading typically at 12 times forward earnings, if it's at 11 and below, I'm a buyer, and I don't care about everything else. But what there wasn't around, that there is now about, is the people who are arguing that the political risk associated with China is much higher than anybody anticipated, and that a lot of investors thought with Xi Jinping, the leader of China, 10 years ago, they were going to get Deng Xiaoping. And Deng Xiaoping was the leader in the 70s, as you know, and brought back capitalism to a certain extent in China with government control. And instead of Xi Jinping as Deng Xiaoping, what we've got is Xi Jinping as Mao Zedong, meaning kill the capitalists. And I think people weren't prepared for that and were surprised. And so there's a whole nother group now that says the political risk is too high, China's uninvestable. This is a little bit long-winded, Mike, but I'm wondering if you give me your thoughts on this.
Yeah, I mean, I think you laid it out really well there. I think it's kind of the old, cliche, fool me once, shame on you, fool me twice, shame on me. And I think if you look at it from that perspective, you've got this situation where China's economy expanded, the stock market went nowhere. It's been very volatile. There's been periods where it's gone way up, but also come way down. And a big part of that is it's not because the stock market hasn't grown. It has. There's been huge issuance. China is one of the largest IPO markets over the past decade across the world. They've had large secondary offerings. So the capitalization of the market continues to grow, but the returns are nowhere to be found. And that's a good way to put it, is a large part of that is the anti-capitalist stance that China has taken. They're almost taking the investor money and deploying it, back across the country. So, one of the trends we're seeing from that, one of the largest inflows into emerging markets broadly over the last year has been to emerging markets ex-China products.
Yeah.
So now
exactly.
Now you've got a whole new issue that you have to think about when going to that market. Is it investable from a standpoint of total return, or is it, really a growth story in economy alone and not in the actual return of the stock market?
Right. Well, there you go, Dave. I mean, Mike just said it there. What's happening is, ex-China indexes are coming out now. That is a very, to me, that's a clear indication that nobody's going to do this unless they think somebody's going to buy it. Obviously, you're in this business too. So there seems to be some kind of market out there for people who think the political risk is too high at this point. Is Templeton going to do this in the future, or do you have any plans?
Yeah,
for that?
it's from a product pipeline. That's something we're definitely looking at. It's almost the next iteration of giving that target exposure. Is if folks want emerging markets but they don't want China, then EMX China is potentially very attractive and something that we're looking at.
Yeah. Dave, how about some other emerging markets that did very well last year? For example, Mexico did very well last year. Brazil.
Mexico, Brazil was a good one. Yeah, absolutely. South Korea had a strong year, although off to a slow start this year. But it just goes back to the broader, the broader point of these single country ETFs, where you can, have a view and rotate as information changes.